Morning, everyone. My name is Tal Hayek, co-founder and CEO of AcuityAds. I'd like to give you a little bit of background about our company. So, I started in the ad tech space back in 2004. Started a company, 2 years later sold it to a public company in Toronto and stayed on. 2 years later, we did $140 million in revenue. Investors were happy, stock went through the roof. I took a little bit of time off and I went to see, in 2009, I went to see a friend of mine. His name is Dr. Nathan McCoos. Dr. McCoos has a PhD in AI and started talking about the concept of creating a trading platform for ads. Brought in 2 other founders and started Acuity. That was 2009. First 2 years was all about building the technology, building the AI layer of our technology. And then in 2011, we commercialized and did about $1 million in revenue. And the year after that was $5 million and then 10. And then 14 and 21 and 40, and then this last year we did around 70 million. So great growth story on a company basis. We won quite a few awards in the space and on the tech side. We have over 50% gross margins. 40% of the company is owned by insiders, and we've done 4 successful acquisitions to date. Now let's talk about 2018 performance. So Q1 2018, we had an $8 million quarter. Was not a great quarter for us. We've done a lot of work during this time to fix the issues that we had. Naming a few of them, we've replaced our management in the US, on the East Coast in the US. We've invested a lot in the technology and more in the AI, and we started seeing results already in Q2. So Q2, we did $12 million. Q3 was $17 million, and we just pre-announced to the market about Q4 at $32 million quarter with 10% EBITDA. So last year, around this time, we were not as happy as we are today. Today, we're ecstatic. Things are going extremely well at the company. From an EBITDA perspective, you can see that we lost money in Q1 and made a little bit in Q2, made more in Q3, and did very, very well in Q4. So we are extremely pleased at the situation at the company. Now, let's talk about what we do. We are in the programmatic marketing space or advertising space. This is something that started about 9 years ago and grew to $85 billion today and still growing at a rate of 24%. This is the process of buying and selling ad units, digital ad units on an auction-based system to the highest bidder in real time. The overall size of the market is $704 billion. That's the advertising worldwide. Inside of that, 300 billion roughly is digital, and inside of that, 85 is programmatic. Now, the exciting things about this space is TV is turning to digital as we speak. And when TV is completely digital, the size of the marketplace is a lot bigger than it is today. So we are at Acuity looking forward and ready for that. Now, how does it all work? If you see on the left side, you see what we call publishers, but those are the website owners, like CNN.com has a website. They would like to sell ad spaces on this website. So what they do is they connect to the ad exchange and offer it for sale. The ad exchange now auctions it off to the highest bidder in real time. It comes into our system, and the first thing we do is look at your consumer profile. Yes, we have a lot of data on you. What we do is look at your demographic information. We look at what you're interested in, your geographical location. Then we go to our database of hundreds of advertisers, and we pick BMW, send it back to the exchange, and we say $5. If we're the highest bidder, we get to show you that ad. And the whole process takes 50 milliseconds. So for you as a consumer, it looks like it all happens at the same time. The other thing I can say is that we get 100 billion transactions into our system on a daily basis. That's 100 billion with a B. The NASDAQ does 60 billion in a month. We do 100 billion in one day. So you can imagine the sophistication of the AI system that needs to see all these and answer them in that 50 milliseconds. Now, how it works from the consumer side is, let's say you go into a website. You go to CNN, you'll see the content of the page load and the ad load. And it looks like it's all loading at the same time, but it's not. What's actually happening, content loads first, and then CNN sends a bid request to an ad exchange asking for 2 things, a creative and a price. It goes into our system, and what we do is come back with that 50 milliseconds with that price. And the whole thing is based by the AI. So every time that there's a bid, there's a win or not win, there's a conversion or not conversion, the whole thing learns and comes back to the beginning. Now, let's look at our competitive landscape. So we have two sides of our business, full serve and self-serve. Full serve is when we execute on the campaign and manage it for the clients, and self-serve when we're giving them a username and password and they use it. On the full serve side of things, there's a lot of competitors because the barrier to entry is small. All you have to do is license technology from us or from our competitors, and it's a white label solution, and therefore you can be in business. On self-serve, most of these companies invested hundreds of millions of dollars into their technology to get to that space. So we like the self-serve side business. We think that's the future. Obviously, we have less competitors on that side. The trade desk is a good comp on the public market that has big multiples out there. And most of the companies on the self-serve are not independent anymore, so they were bought in the past. Omnichannel solution. What does it mean? It means if the advertiser wants to execute on a digital ad campaign, we can cover it all for them because we believe in the omnichannel channel solution. So mobile ads, video ads, connected TVs, display, native, and audio all could be executed on our system, which we think is very important from the advertiser side for two reasons. Number one, it's obviously easier to use one system versus many, but also when you want to have that one-to-one conversation with a consumer, it's impossible to do it if you're using multiple systems. If you're using one system, you're able to coordinate your message. So that is extremely important. This is a sample list of our client base. Obviously, we have a lot more than those, but generally speaking, you see the Fortune 500 companies who are using our technology. I can say that I'm very happy and very pleased with the fact that we are increasing the client base year over year, and the average spend per client is increasing every year as well. So remember I told you that it's very important to deliver a positive ROI for the brands on their ad campaigns. This is where we see the results. When the clients stay with us and spend more with us, it's because we are delivering higher ROI to them. Now, growth strategy. A lot of people asking me, how are you going to keep on growing so aggressively? So we have it down to 4 areas. We keep investing in the AI technology. Why is it so important? Because as we deliver better ROI for the brands, they spend more money with us. So that's extremely important. Second is investing in marketing and sales, which is a part of our organic growth, of course. Self-serve, usability. So we identified that our system, you need to be an expert to use our system. I almost say it's almost like being an F-15 pilot to use our system. So you need to be highly trained, and it's a very powerful system. But we want to bring it down to a place that average people that are not highly trained can use it. And we are making a lot of investment on that side, and that's a big part of what we're doing this year. And strategic acquisitions. Why strategic acquisitions? Because about 9-10 years ago, there was a lot of investments done in the space by venture capitals, mostly in the States. And we're seeing companies today that many tens of millions were invested in those technologies, and we are able to pick it up for close to nothing. Why? Because VCs are not writing checks anymore, and the companies who are losing money have a lot of waste in them, and usually under the first day under us, they're making money. So great opportunity. Like I said, we've done 4 acquisitions to date. From management team, 4 of us are founders. So that's myself, Dr. Nathan McCoos, Rachel Kapkan, and Joe Antman. We've brought in Jonathan Pollack as our CFO just under a year ago, and Siraj has been with us about 2 years from one of our acquisition. He's the guy that gets up on stage and speaks to the CMOs. So we have a great management team that's really obviously delivered great results last year, but throughout the years. And on a board level, we have Sheldon Pollack that's been with us. He's been actually the first outside investor in Acuity, and great reason of why we're here today, so successful. very involved with the company. We have Igal Meir, same, they've been with us from day one since we went public. Roger Dent and Ishai Waxman, who comes from the industry as well. From a market cap position, we have about 40 million shares outstanding. Not a lot of options or warrants, and about 40% of the company is owned by insiders. I'm out of time. A lot more to tell you, but this is it for me today, and thank you very much. Have a great day.